A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a bold and unprecedented move, U.S. President Donald Trump announced on Monday that he is firing Federal Reserve Governor Lisa Cook over allegations of improprieties related to mortgage loans. This decision raises significant questions about the extent of presidential power over the independent monetary policy body, particularly if the action is challenged in court. In a letter addressed to Cook, who made history as the first African-American woman to serve on the Federal Reserve's governing board, Trump asserted that he had sufficient cause to remove you from your position. The allegations stem from claims that Cook indicated on documents for separate mortgage loans in 2021 that properties in Michigan and Georgia were both her primary residence. Cook, who was appointed to the Fed board in 2022 by former President Joe Biden, has yet to provide a comprehensive explanation regarding these transactions, which were brought to light by William Pulte, the director of the U.S. Federal Housing Finance Agency. Pulte referred the matter for investigation to Attorney General Pamela Bondi. As of now, neither Cook nor the Federal Reserve has offered an immediate response to Trump's announcement. This latest development comes at a time when misinformation and an overload of information pose challenges to quality journalism, making it imperative for the public to stay informed. Trump's decision to remove Cook is unprecedented and could ignite a legal battle that may reach the Supreme Court, potentially disrupting financial markets and raising interest rates. The independence of the Federal Reserve is crucial for its ability to combat inflation, allowing it to take necessary but unpopular actions such as raising interest rates. If bond investors lose faith in the Fed's capacity to manage inflation effectively, they may demand higher rates for bonds, which would, in turn, increase borrowing costs for mortgages, car loans, and business loans. Should Cook be forced out, Trump would have the opportunity to appoint a loyalist who aligns with his agenda of cutting rates. Historically, U.S. presidents have refrained from firing Fed governors, respecting the institution's independence. The most notable instances of pressure exerted on the Fed came from former presidents Richard Nixon and Lyndon Johnson, who sought to maintain low interest rates behind closed doors. This pressure has been criticized for contributing to the inflation surge of the late 1960s and 70s. Cook, who has publicly stated her intention to remain in her position despite Trump's calls for her resignation, emphasized her commitment to transparency regarding her financial history. Senate Democrats have rallied in support of Cook, who has not been charged with any wrongdoing. Trump's announcement, made via his social media platform Truth Social, claimed Cook had made false statements on one or more mortgage agreements. The allegations, primarily stemming from Pulte's accusations, suggest that Cook may have claimed two primary residences in 2021 to secure more favorable mortgage terms. The Federal Reserve Act does permit the removal of a sitting governor for cause, but this provision has never been tested by a sitting president. Traditionally, presidents have adopted a hands-off approach to the central bank to preserve its independence and public trust. In his letter, Trump accused Cook of deceitful and criminal conduct in a financial matter and expressed a lack of confidence in her integrity. He argued that her conduct displayed negligence in financial transactions, raising questions about her competence and trustworthiness as a financial regulator. Trump asserted his authority to remove Cook under Article 2 of the U.S. Constitution and the Federal Reserve Act of 1913. Cook, who took out the mortgages in question while she was an academic in 2021, has maintained that she will not be intimidated into resigning. She stated, "I have no intention of being bullied to step down from my position because of some questions raised in a tweet." As the situation unfolds, the potential implications of Trump's move are significant. The Fed's next meeting is scheduled for September 16th, and the market has already reacted to the news, with a steepening of the U.S. Treasury yield curve. Yields on two-year notes, which are sensitive to near-term Fed policy expectations, fell quickly, while yields on longer-dated 10-year notes, which are more sensitive to inflation risks, rose. This reaction suggests that the market anticipates an increased likelihood of a policy rate cut, albeit at the cost of the Fed's perceived commitment to tackling inflation. Academic research consistently indicates that central banks insulated from political influence tend to achieve better economic outcomes, a principle now facing a direct challenge at the world's most influential monetary institution. Tim Dewey of SGH Macro Advisors commented, It speaks to the determination of this administration to remake the Federal Reserve and serves as a warning to the other Biden appointees. The Fed as an institution escaped harm in the first Trump administration and will not be so fortunate this time around. As this unprecedented situation develops, all eyes will be on the Federal Reserve and how it navigates the challenges posed by political influence and the need for financial stability. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.